Hello and welcome to Commodity Champions. I'm Manisha Gupta. And the crude prices remained volatile after hitting a 13-year highs on Monday as tensions increased between Russia and Ukraine. The gas supplies across Europe may be impacted as Russia threatens to cut off its supplies. Remember, 40% of Europe's gas supplies come in from Russia. And it's not just energy. Precious metals are also trading near all-time highs. Industrial metals like aluminum, copper, zinc and other commodities have also surged to all-time highs. And nickel clearly has displayed in its recent run on how uncertain the market currently is. So will the surge in commodity prices continue? How will the current sanctions impact global crude supplies and other commodities? To get answers to all of those questions, I am now joined by Guy Wolf, who's Global Head of Market Analytics at Marex, and Ole Hansen is Head of Commodity Strategy at Saxo Bank. Gentlemen, hi, thank you so much for joining us. Ole, I'll start with you, and I'll start with the metal space itself and what's really happened in nickel in this week. In last 5 years, we've seen $11,000 of a move in nickel, and last 24 hours or this week itself, we've seen $75,000 of a move. We understand the fundamentals are strong, but would you say that the market's uncertainty are really dizzying?
Well, what we're seeing right now is completely disorderly markets because we have some short positions out there being squeezed and margin calls being called for, and that's really the main reason for this pretty dramatic rally we've seen overnight. It's also the reason why the LME for now has suspended trading. They basically want to clear out the rubble and see who owes what to who. We did have stories yesterday about a Chinese bank that has been given a 24-hour reprieve to post their margin. But with the move overnight, we are looking at billions of dollars of losses being shared among traders. And we have to remember, this is not just speculative traders sitting in a basement trying to be smart on the market. These are some of the major players in the market, potentially miners who have sold some production, forward production through the futures market. With the production or the revenue is not going to come in anytime soon, they are suddenly faced with a big financial loss on their short positions. And that is what's leading us to the next stage in this commodity rally, basically the risk of systemic risk and financial risks.
Well, absolutely. Guy, what's your sense? Because we are looking at inflation concerns, financial concerns, geopolitical tensions as well. And there are underinvestments in many of these metals. There are strong supplies deficits here, and the demand clearly is on the higher side, whether it comes from the conventional sectors or EV or renewables for that matter. So where we stand right now, how are you looking at this market?
Well, I think it's important to distinguish between the more medium-term effects, which are indeed related to the fact that inventory levels across many commodities, in particular some of these base metals, were incredibly low. Markets were incredibly tight, and that was before obviously the situation with Russia and Ukraine, where Russia being a fairly major producer of both aluminium and nickel in particular has just exacerbated the situation. But certainly, the last 2 days, as my co-guest just mentioned, it's more of a technical situation whereby it's not, it's a cash flow timing issue. If you're a producer of nickel and you don't want the exposure to the price risk, you hedge that by selling futures. But you have to put up margin, you have to put collateral against those short future positions. And to be blunt, the world is set up for some sort of vague parameters of normality. It's not expected for nickel to go up, 90% one day, 100% the next day. That's not the cash that people tend to keep on hand to meet, what is effectively like a 15-fold increase in the margin that they have to put up to offset those losses. But it's not the same as insolvency. That's the one thing I would say. These are producers who have hedged in futures to avoid price risk. But unfortunately, in situations like this, what you get is liquidity risk. And I think we are, unprecedented is a word that's used far too often, but this really has been unprecedented in the metals market in the last 2 days.
Clearly. Ole, I know this is anybody's guess. You can't understand these markets, can't gauge them also. But how long are we prepared to see this kind of a movement? How long stretch this conflict between the two countries can be? And with that light, how are you looking at the commodity markets?
Well, it really is. It really depends on how long the conflict continues, but also the aftermath, because obviously Putin is being regarded as pretty toxic. around large parts of the world, and coming back to some kind of normality is obviously going to take a long time, and before we get to that, we probably in the short to medium term facing a bigger risk of an economic slowdown. Basically, demand needs to be reduced to the level where it matches supply, and we're seeing that already starting to unfold here in Europe, where gas prices yesterday reached the level equivalent in dollar crude oil terms of $630 per barrel. That is that's starting to have a negative impact on demand, and until we get all channels open again, we get supplies coming to where they are needed. The only response that the market can do is by cutting demand, and I think that process is obviously one that's going to be very painful. It's happening at the same time where inflation is going up. So again, two major drivers that will also support other commodities such as investment metals.
Mm-hmm. I'm just sticking to metals for some time longer, and aluminum has hit an all-time highs, palladium has hit an all-time highs, we've seen copper hitting an all-time high, zinc is trading at a 16-year highs, and we've spoken about what nickel has done too. Underinvestments is one part of it. The other clearly is about, as Ole mentioned, a demand destruction. Do you see that coming in anytime soon, or do you see a quicker reaction from the supply side?
I think we're starting to see it in nickel. There's already been stories today of some steel manufacturers sort of saying they're not going to take any new orders because of some of the input costs. But you're right. One of the issues has been in the long term, there's been no investment in new supply for the best part of a decade. Secondly, we've had, as a result of the pandemic, enormous supply chain bottlenecks, which are well observed. And, we've just had a declining level of inventory. And unfortunately, when there is no more metal left to sell, the only way in which demand can be regulated is through price, which has to cause demand destruction. And one of the problems, to be blunt, is that commodities and base metals in particular, I would say, are actually very cheap. Copper, just over $10,000 today. It was that's the same price it was in 2011. But the cost of housing has probably quadrupled in that period. Cost of everything has gone up significantly. So even after copper going from just over 4,000 to 10,000, it's still the same price in nominal terms as it was a decade ago. They're not expensive enough to cause people to shut production. I think the energy side of things is probably going to be more impactful in terms of the hit to household budgets. But when nickel went from $25,000 to $50,000, then probably adds $2,000 to the production cost of a Tesla. Now, you're not going to shut the factory for that. You're going to either be able to pass it on or absorb some of it. So these kind of commodity prices actually potentially have to go up a long way to cause the demand destruction that might actually be necessary.
Ole, when you look at metals yet again, what's your sense on how much higher can prices go from here? I mean, we're just about breaking out on charts. We are yet again going through that multi-year highs, record highs for some of them. If you were to take a call from here, how much of bullishness, percentage-wise, if you may say so, are we looking at in metal space?
Well, I think over the coming days, we just need to clear out the rubble. As I said, we need to get the margin calls sorted out. Okay. Once we have that, once we have a clearer picture about that, we may see some of these prices come back down again quite significantly. Nickel is obviously a candidate for a major correction once we get the financial side sorted out. But as mentioned before, I agree. Something like copper has really been underperforming, and there has been some worries about Chinese demand, which has been holding it back for the past year. But it is showing signs of starting to move higher, and with the whole the decarbonization process, we're still looking at around the world, even though it may have softened somewhat by this crisis. That will continue to require large amounts of metals, but we will see a market trying to think smart. I think we just saw Elon Musk from Tesla out this today or yesterday saying that this rally in nickel is unsustainable for his production, so he needs to switch to other battery types, and this is what some of these price actions will do to the market. But until we get the supply channels open again, then the market will remain bid, and we will continue to see this very high level of volatility.
Clearly, and yes, as you said, the global map clearly seems to be changing, and it also seems to be changing the way the work is done. And there are these raw materials which are getting very expensive, uncertain in sense of supplies as well. And only time will tell on where we are headed with many of these. But gentlemen, do stay on because